Hi, welcome to the Market Alert for Tuesday, 22nd of November 2022. So stocks and crypto dump, dollar jumps despite dovish daily. China anxiety outweighs dovish daily though, apparently. So what's going on in China? Risk off with new China restrictions while oil whipsaws on OPEC reports. And more Chinese news. US stocks tracked global peers lower amid China COVID woes. Again, I think they're starting to lock up people, aren't they? While oil prices whipsawed on OPEC headlines and Saudi denial. So let's just have a look at the subhead. US stocks were lower amid broad dollar strength and commodity weakness, with Chinese COVID woes hitting the global demand outlook, while oil whipsawed after a report that OPEC members are considering a production increase, which Saudi officials denied. So if it's officially denied, it's generally true. News for today. What have we got? Let's just make sure these are the right times. There we go. 3 p.m. We've got Richmond Manufacturing, and we've got 3 FOMC members out trying to talk the market up from 4 p.m. So this will suit the Dow from 4 p.m. No doubt they're all going to be trying to politely say that we may be reaching a tipping point here, but obviously they won't be. They'll still need to increase rates, but they just want to put that out there to underpin and support the current move in the markets. Gold silver ratio is starting to move back down, as you can see there overnight, 82.61. Let's have a look at the markets yesterday. Very quiet. It's Thanksgiving week. The markets are generally very quiet during this week. So again, err on the side of caution. There's no many big moves because they don't put the economic news out either, despite that we've got the FOMC meeting minutes tomorrow night. Then we go into the market being closed on Thursday. That's the US market, and then half-day trading on Friday. Let's have a look at the Dow. So yesterday we see the Dow moving higher. Interestingly enough, we've got the volume there spiking up as well. And we've got a bit of a retracement going on there from this high, which is always good to see, with the momentum dropping off as well. So we came back to 78% there. Let me just widen this out so we can get a closer look at it. Now you can see that we came into the 78% area and we've got a bit of weakness overnight. Now the market has moved up and it could move down, and we could end up with 89% in this area where the market finds support. But we went through the 38, the 50 and the 62. Now the gap that we saw yesterday in the alert in all of the stock markets and some of the currencies, I think it was down to bad data, and thanks to Tony for letting me know that his platform was fine. So it may have been something with ETX, because I couldn't find any sign of news that would allude to the market gapping up like it did during yesterday. So it must have traded up to those highs, and then of course the market down during the day. But back to this chart, we've got the market pulling back. We've got the retracement in the 78, 89 area, where a market tends to find a move to the downside after this. If not, then it's got to try hard to get through this area, particularly as you see the momentum starting to drop off there as well. In the 30-minute chart, we moved higher initially, and then we sold off. Then we came back, and then we traded sideways. And at the moment, we're just breaking below the DP there and holding at the 50 EMA. We've got the 200 MA in between, and this is the low for yesterday as well, which you can see here. So not that far off. It's only 150 points, which is nothing in the Dow there. The market, to move higher, will need to get above that DP and the close and head back towards yesterday's high. So clearly defined today. We've got a range. You see how quiet it is, of only 150 to the high, 150 to the low there. In the German DAX, we've got the market trading back to the high there. We've got a sort of double top again. Let me just expand this out so we can see. Let's just draw this in. So we've got the high here. We broke that yesterday. We've got some supply coming in. We've got the momentum starting to drop off, and we've got some weakness here. In the 30-minute chart, you can see there we've moved up overnight with a spike. We've become overbought, and the market yesterday's high bounced off that and started to move lower to the DP. Like the Dow, it's got the 50 EMA in the way there, and we've got the low there, and that is about 150 points lower. Sorry, 100 points lower, not 150, it's 100. Where's the line? There we go, yeah. From where we're currently trading, between the two red lines, is 100 points down to the 200 MA and the low, where if the market gets down to this level, we'll find major support for sure. And just going back to yesterday's session, you can see that we went down to the 50 EMA, we became oversold, stochastics crossed twice, and then we started to move back up with the Dow in the afternoon. In the S&P, lackluster day yesterday for this market, weakness overnight as well. The high that we saw last week has not been breached at all. In the 30-minute chart, again, we moved higher, we followed the Dow lower, we retraced 89% and we've been sideways ever since. We're at the DP at the moment and the close, and also just at the 50 EMA as well. We're below all the three averages at the moment, so a close back above this is required to get anywhere near the high. The low as well is going to be attacked if we can break the DP level convincingly and move down to this area. In the FTSE 100, a very similar picture to the DAX. The market retracing there, above 89% retracement overnight. And you can see there we've got the 89 in place here, and I'm looking at 89% retracement in here, which we've gone through sort of a double top here at that 74.25, just slightly short of it. And in the 30-minute chart yesterday, we shook out, we came up, we had another shakeout when the Dow came on board and opened up, and then overnight the market's been sideways with a look at yesterday's high, and at the moment we're sitting at the close and the BRN. Close below this puts you on target for the 50 EMA and the DP. That will be a major area of support. So if you were short, you'd want to consider locking in profits at this level. If we break this, we go down to the 200 MA, got the S1, the low, but in between this, we've got the psychological level where the market found support yesterday with all of this volume here as well. So again, even if we were to break all of these areas, this area is going to be an important one. In the currencies, moving up nicely at the moment in the GBP JPY through the 50% retracement yesterday, struggling with the 62 golden ratio overnight at the moment, but through the 20 bar moving average there as well. Meanwhile, in the 30-minute chart, you can see the market moving up nicely yesterday, coming back to the 20 bar moving average, showing the momentum dropping on the downside with demand and a crossover, and then moving back to the upside. And at the moment, sitting on the close and the high of yesterday. In the pound, we're sideways to higher. We've got a bit of demand there, but we're losing a bit of momentum at the moment. And in the 30-minute chart, you can see their choppy session for the pound yesterday. Not a great deal in range at all. Just a choppy up and down move. Overnight, though, in Asia, the markets moved quite nicely, taking out the 200 MA, but then failing to hold, with selling coming into the market, but becoming oversold at the DP level. So we could see another bit of a move off this to the upside, so long as the US dollar moves lower. Speaking of which, let's have a look at the dollar. So yesterday, the dollar moving higher, we got some supply coming in there, the momentum switching to the upside. We need to take out the 50 retracements and the 62, but at 78, we've got the 50 EMA and the 20 bar moving average offering some resistance there as well. In the 30-minute chart, the market moving higher and then pulling back, then higher again, taking out the high to the left, but failing to hold, and the market then moving down. But you can see overnight the market sitting in this area of support, DP and the 50 EMA in that 30-minute chart. In the metals, silver finding a bit of demand for yesterday and moving up on the overnight. So we'll look at that in more detail. So down in the first part of the session, we've got your demand there in the smaller time frame, becoming oversold as the market retraces, then up to the 50 EMA where the market struggles, then retraces once more, becoming oversold, and then holding at the 50, creating resistance and eventually breaking through. But you can see there at the moment the market trying to get back below the $21 level. That's a very important level. It needs to hold. If not, we break through that, we'll come back and retest the DP with the high and the two averages in the way there as well. In gold, also finding support yesterday at the 38% retracement, and in the intraday you can see the market moving higher, then slammed when the Dow opened, and of course the crude oil fiasco of yesterday with the Saudis sending the gold market lower, and also crude oil drastically lower until it bounced. And then we see the market moving back there, recovering from the news that was released. It was one of those that wasn't an official news item. It just came out of the blue and had a bit of an impact there on the dollar, crude oil, and the gold market. Okay, that's a quick roundup of events. Like I say, it's Thanksgiving week. It's generally quiet during this week. You don't get any significant moves, as traders don't want to get any indigestion on Thursday from the turkey, knowing that the positions could be exposed to a massive squeeze either way. So let's see what today brings. And Tuesdays, of course, are generally quiet as well. And as I've said all of that, it'll probably be one of the most volatile days that we've seen in the stock markets, because that's the way it works, isn't it? But generally, quiet day. Okay, that's it for this one. As ever, thanks for watching. See you in the next.